So good evening, active traders, and hey, welcome to Breakout Master. I'm in a great mood because I made a lot of money today, so that's cool. I wanted to wish you all the very best. We're going to be looking at the Breakout Mastery program curriculum for this year. It's the same as it's been since the year 2011, and with hundreds of people that have registered over the years, I sincerely appreciate it. But I want to spend most of tonight giving you guys value. I'm a big fan of Gary Vaynerchuk, who's always talking about, give a lot of good value and the business follows. And that's always been my motto: is authentic, real trading examples, plus real good training and development strategies and tips that can hopefully help you make more winning trades more often. And by the way, I got something to offer if you want to continue, not a big pitch fest like most people do. So anyway, because I don't have to do that. So anyways, as always, all information is for educational use only, blah, blah, blah. Not making recommendations about what to buy, sell, or hold, blah, blah, blah. If you got questions about breakouts, I'm your guy. Or pivots, too. I've been trading pivots like a son of a gun lately, so feel free to ask me questions. I'm a guy who has done as much as 4.9 million in actual trades in a single year, and I'm on track to do quite well this year, too. So I'm a busy guy, and I not only show examples. See, back in the day, I had been trading 2,000 shares. That was my biggest dollar trade to this date, and this was way, I don't know, like 10 years ago. It was overnight. Couldn't sleep a wink. I still remember, but I made $3,000 on the trade because it gapped up. It was 2,000 shares of MGM stock. I bought back when it was $10 a share. I remember when I was doing seminars at the MGM and the share price was down at like $5 or $6 a share. I told all the bellmen, the bell guys up front, I said, your guys' stock is way too cheap. You should be a buyer. And it went on up to 30 from there. And I don't know where it's at now, probably 20, 25. Anyway, I digress. Thanks to everybody who's seen me at the Traders Expos as a featured speaker for so many years. I'm not doing those currently. I always get invited, but it's with my schedule. You guys know I do webinars 6 days a week, plus work on Sunday too. So, you've probably seen me all over the place. I miss Active Trader Magazine. Bob Dorman, the publisher, is a really nice guy. I always used to see him at the Money Show events. He always gave away copies of the magazine, but the magazine is no longer with us, unfortunately, but I miss publishing in that. And I miss you guys in person back when I did the Vegas seminars. Anyway, get on with it, Calhoun. What are we here for? Let's take a look at breakouts. Now, what I'm going to cover tonight is basically some examples of the type of thinking and the thought process that I offer in my Breakout Mastery course. And I'm not going to go through it in any detail. I will let you do that on your own. But basically, it's a 1-year-long course that we meet every single month, and you can either do it by the month if you want, or you can save by registering for the whole year. And we meet at the last Wednesday, unless it's a holiday like November, December. Usually it's not, but the other months it's the last Wednesday of the month, and it's 1-hour events plus Q&A. We often get spirited Q&A going back and forth. I'm around for another half hour, 45 minutes answering questions. And I'm not going to read all these topics. They're advanced breakout strategies. None of this stuff is breakouts. This is a triangle pattern. This is a cup. None of that. This is all my advanced professional grade player level material. So anyway, that's Breakout Mastery. You can get to it by going to breakoutmastery.com, and that domain forwards over to the page inside my Trade Mastery site. So, and that's all I'm going to say on the sales angle of it. Let's go ahead and get underway with trades, right? What's going on? Well, let's get the party started with TVIX. I was long overnight 100 shares of this and TQs. Tonight I'm long just 30 shares. I lightened up because I anticipate that it may do a mean reversion. The odds are it may well open at 48 or something, right, tomorrow morning. So I'm not doing 100 shares or more. I'm just doing a 30 share position in both TVIX, and I also bought 30 shares of TQs. And since they trade exactly opposite, I'll be looking to profit from whichever one decides it wants to run. And I was trading TQs correctly off the bottom here, so I got a little bit out of it, but I sold too soon. I didn't let it run all the way up here. But story of my life as a trader, I tend to not let things run very far. I tend to take profits way the blank too soon. That's one of my biggest shortcomings. And others, I'm not patient enough to just sit there and buy it and wait all day like I keep saying I should. I grind. I go in and out of the positions. And I made a lot of money today, but I would have made more if I just bought 200 shares on the open and walked the blank away and came back at 4 it closed out the position, right? But anyway, maybe you'll be more patient than I. Breakouts are what I teach, and it's what I trade every single day, and pivots, but I prefer breakouts. I like to buy strength, buy things when they're in the green. TVIX, I remember in my Active Trader Pro, the Fidelity workstation, that was the #1 volume percent gainer in the entire industry was this guy today. So it doesn't look like it, though. The volume doesn't look that big. But anyway, it was the biggest volume gainer, percent gainer. So anyway, look at the range in this, 45 to 52. Even if you only trade 50 or 100 shares, and if you bought 100 shares here, sold 100 shares there, you have $500 or $600. So that's not too bad. One of the things you want to look for when you're looking to trade breakouts is patterns that aren't obvious to the crowd, because it's been I don't know if your experience has been like mine, but it has not been a market in which you can just blindly buy breakouts, because often the market makers on the other side of that are the quants or the hedge funds, and you get stopped out. So what you're looking for is breakouts at a place that are unlikely to be stopped out. And the way you do that is to learn all the different patterns that I teach in Breakout Mastery. So for example, when I look at this chart, let's do a basic. Go over in the triple biotech long lab U. I often day trade this one against lab D. What's the technical pattern here? What is this telling you? The main thing that jumps out to me is a shooting star resistance. That's the one thing that jumps out to me, shooting star resistance. And be sure to learn candlesticks exclusively from Steve Nissen. There's a bunch of morons out there pretending to be experts teaching candles. They don't know. They make so many mistakes in their YouTube videos. I spot them like every single time, and that can cost you a lot of money. So I'm very loyal to Steve because I use what he teaches and do well with it. So anyway, but I digress. Anyway, shooting star. So we don't want to buy unless it breaks somewhere over 52. Profit potential, though, is not very big in this because it's already ran off its base from 24 up to 50. It's already doubled over the last few weeks. So from a percentage, an odds standpoint, like a Vegas bookmaker, right? I used to spend a lot of time in Vegas casinos talking to the floor managers, the pit bosses, and the dealers, and learning the whole Vegas hustle. And it's all about the numbers and table yields and the odds and the rest of it. And as a trader, you want to be an odds-based trader. And as a breakout trader, you want to trade breakouts that have the best odds. As we all know, right, Trading 101, as I've taught for many a year, the best breakouts are going to be minor gap continuations, gap runners, right? So this guy gapped a little bit today. I'd gone 100 shares long on Friday. I sold at the first sign of a pullback on the open, but then I rebought wisely many times on the way back up today. Nailed it. Made lots of money. So that's cool. But the point is, small gaps that continue are one thing you want to do. Now, you don't want to just buy small gaps. Here's a quick rider downer. Borrow that phrase from Dan. A rider downer. This is a small gap. You would have gotten screwed if you just bought the small gap. Am I right? You'd have bought, 53, and taken a stop somewhere lower than 53. So it's not enough just to spot a gap. You have to have enough buying pressure to support a trade above the high of the gap. And there's some very specific patterns that you look for to help determine that. And I teach that in Breakout Mastery, the nuances of exactly what to look for your gap continuation, your momentum runners, right? For example, something I'd been trading on the way up was T-triple-Qs. And often, see, this is a small gap that continued in a nice way, right? This is I believe it's a 15-day chart, 3, 6, 9, 12, 15 days it is. That's a small gap that continued. This is another small gap that continued. One of the patterns, or one of the roll up your sleeves and do the hard work things that you have to do as an active trader is, and I spend my life doing this for 20 years. I'm celebrating my 20th year in business. I founded the company back in 1999. I started the live room in 2000. I started Day Trading University in 1999, the first university-themed site, widely copied by other people who thought, oh, that's a good idea, let me make a university. But check the Whois domain registry dates, and you'll see Day Trading University was the first in the entire industry with the university theme. And I got that because I was adjunct faculty at the time for various private universities, and I thought, hey, let me start my own online university. So anyway, the point is, this is a minor gap that continues. One of the things you have to do as a trader is kind of roll up your sleeves and look for repetition. Patterns repeat. And I'm so keen on education and training that actually makes sense and is intelligent and well developed. So what do we notice here? Large green candles on a gap up open are the best breakout pattern in this particular instrument. The large green candle approach is, I need to come up with some fancy name for it, but in the interim, I just call it the large honking green candle. A nice big buying candle dries up supply and led to multiple days of breakouts for swing trades or for day trades, right? So large green candles are one thing that I teach often, and this is a good example of kind of a close-up view of a 60-minute candlestick chart illustrating large green candles following small gaps that dried up supply and led to a nice big multi-point run after the large candles were spotted. The large candle approach is one that I have used for many years in my own trades because it's so spectacularly intelligent. So what do you think? How do you think I feel then about something like TVIX? Happy days are frickin' here again. Large honking green candle, the first one in a month. That's kind of a shot across the bow for any of the bulls. You know, I was telling people to sell into, at least I should say, I was telling people I was selling into the bounce here. I was not trading aggressively the tail end of the run here because I thought the bounce would only last a week or two, right? Because it usually does. The window dressing January effect. The first week or two, mutual funds are accumulating shares the first couple of weeks because they've got to. They've got to put their capital to work. They're under orders to buy stuff the first couple of weeks, which is why you virtually always get a rally the first couple of weeks of the market. But without sounding like a talking head, our goal is what to capitalize on next. And the thing is always anticipatory volatility, which is why I held 100 shares long TVIX, which for me is a lot. That's like $5,000 worth of this stuff overnight because I anticipated the rally today in this instrument, which we got. Anyway, the point is we got a large green candle. Now we've got a moving average resistance of 54. If I were swing trading this, I guess technically I am. I overnight swing trade this frequently, but if I were longer term swing trading it, I would wait for it, again, not a trade recommendation, but I would be waiting for it to break above that resistance area because algos, the Boolean operators that are mathematic trading algos and software and high frequency trading algos and dark pools and liquidity traps and all that kind of crap is going to hit the ask, hit the bid, stack up on the ask at 54. So it's going to cause a pullback likely right near 54. So thinking ahead of time. These are like small math puzzles that we get to solve. I used to be a corporate statistician for the Ford Motor Company, and I am a former National Baldrige Quality Award examiner and a certified quality engineer. I got my CQE certification. Anyway, so that was back in the 90s, a hardcore numbers guy. Anyway, the point is, this math puzzle, we look for variability and variance that we want to solve for. We had a nice big green candle day today. We have resistance of 54. What does that tell us? It tells me two things. One is the following. Like, don't get your panties in a bunch because we had a huge run up today, and if you missed it. I didn't miss it. I live on TVIX. I nailed it. I made so much money today. I'm so happy. I love making money. I'm just really enthusiastic about that. When I was younger, it was like, I used to love dating women, but I don't really care about that stuff anymore. I'm happily married for 20 years, but now I love making money and teaching people how I do it. So the point is, after a big day like this, just like a gap, we're likely to see a pullback or a resting day tomorrow. So we're likely to not see another 8-point run day in TVIX tomorrow. We're likely to see maybe it drops to 49.50, grinds and wiggles between 48.5 and 51, and ends up near 50. 150, 52 at the end of the day, not even worth trading tomorrow. I could be wrong, but oftentimes what you find is large candle days are followed by flat candle days, and that's one of the examples of the strategies that I teach in Breakout Mastery. Very intelligent, very focused, very based on real money trades that I did today. Unlike any other educator out there, those guys do sim trades, and a lot of them aren't even real traders. They're just full of crap, but I like to be refreshingly honest. My biggest failure is the traders that don't trade large size. I need to get over that. That's my exit from the business. I'm still in golden handcuff territory because I make so much in my business, but I need to start trading larger size so I can make even more from the trading than I do from the business. So that's my goal for this year. Anyway, but the point is, after a large green candle, you often see a flat candle day. So just because it's all exciting today does not mean in any way, shape, or form it's going to be as exciting tomorrow. I would bet against it. If I were laying the over-under in a Vegas odds table for the house, I'd give it a 70% odds that we're going to have a flat within 3-point range day and only a 30% odds of a trading ATR greater than 3 points tomorrow. That's the odds I'd lay if I were working for the casino to lay odds in a. And we should do that. I should do that. I know so many casino bosses, right? We should. I digress. Anyway, the point is, when you see a large green candle day as a breakout trader, you don't want to be all aggressive the day after. So that can help you avoid false breakouts. You're welcome. Remember I said that, because often I get carried away. It's like, hey, we had such a big honking day today. Let's do more of this tomorrow. It'll be fun. And usually, no such luck. It's going to be a flat, do nothing, chop you out, frustrating day. And maybe the day after is no sparkler either. But Friday's a big monster run up and it runs to 60 kind of thing. So you have to keep your finger on the pulse of the market by looking at the height of the candle patterns and realize that they cycle. They often cycle. What happened the last time we got a big green candle day? Well, we got a smaller green candle. But look at this pattern. We had a large green candle day of exactly the same height. Be like my colleague Steve would say, be a market detective. Large green candle there of that height. If you look at the same candle here, look at what happened. That would be a big bearish cup day. And a shooting star, almost, not quite a shooting star, but a bearish upper shadow, quasi-shooting star type of a day. So it ran up and it ran right back down again. If you were to plot the data points, it'd be a bear cup. Okay, so again, it's a small whole real body candle day, following the large green. Following a large green here, small candle day. Large green here, kind of a modest red day, gap up the ran and then pull right back day. So here, and that's the kind of thinking you got to take it, because you're competing against guys like me. And we know what we're talking about, right? I'm a genuine expert, and I want to teach you guys the mechanics and the ins and outs of how to identify patterns that make sense and how to trade them. And equally important, well, more important, how to manage risk and avoid getting hit by false breakouts. If you've ever been hit by false breakouts, you know what I'm talking about. It's very frustrating. If you're in an open swing trading position, if you see a shooting star, you sell the low of the shooting star on the following day right here, right? You don't hold on to it for it to go down here. That's kind of candle trading 101, but did you take action? Now let's take a look at some other patterns. See, here's what I mean. See this large green candle day followed by a little doji day. That's the name of our Shih Tzu, Doji. I called her that because she's very uncertain and she runs around in circles. Very confused, but very cute. But the point is, large green candle day, flat day. Here, the same thing, it works. A question had come in, Eric, about same for reds. Yeah, red candle, large red candle day, small green day, right? Small doji, uncertain, didn't know what they wanted to do day. So don't get all excited after a big day. If you profited like I did, be happy about it and celebrate it, but don't expect the same exact pattern on the day after that day. Oftentimes when you see things like a shooting star at a major moving average resistance, and this is the 200 is green. On my white charts it's black, but here it's green. If you see a shooting star confirming an overhead 200 SMA, I use the simple moving average, not the EMA, I use SMA, then that tells you got resistance and you don't want to buy it unless it breaks above that line over, say, 53. So you don't fool around with it in this region here, 50 to 52. Again, strategies designed to help you avoid a false breakout, because a less sophisticated trader might say, well, hey, it's in an uptrend, it's pulling back, I'll buy the bounce in an uptrend over 51 because surely it can run to 52 and beyond. No, don't do that. Learn how to disqualify charts from consideration. Just like being a good judge of character when it comes to people. I don't know how many of you have dealt with people who are frustrating to you, but I know I have. That's why I like an isolated lifestyle where I have a wonderful family and that's it. And wonderful traders and colleagues that I trust and that I like and all that kind of stuff, but I don't have to deal with, with the general public as much. I mean, some of the general public are really nice people, but a lot of times if your experience has been like mine, if you've ever worked in a big company, it's a lot like Dilbert, the wonderful Scott Adams cartoon, where you deal with, okay, here's a gap continuation runner, bosses who are control freaks, coworkers who are total morons, and customers from hell. I don't know if that sounds familiar, but that's why I love a trading lifestyle. I've been doing this 20 years now. This is my 20th year in business. And there's a reason why I have the longevity. I've been around longer than some of these YouTube kids since they were in like kindergarten. Think about it. Some of these guys who are, I admire their hustle and their social media presence, but they give such bad trading tips. They really don't know what the F they're talking about. They're total freaking morons. The other great breakout trader is Harry Boxer. He's freaking brilliant. Learn from Harry Boxer. He's the other great guy for breakouts. Me and Harry, the two best breakout traders. But anyway, some of these kids, they're like, 23 years old. I've got shoes older than I do. Seriously, I got what do you call it? The Ferragamo shoes that I used to wear, and Brioni suits and all that kind of stuff. But they were in kindergarten when I was trading, and probably many of you too, right? So when it comes to learning, choose people that have some experience and know what they're talking about. Now, no, we're not like on Instagram and Facebook all the time. We're not social media morons. We don't waste our lives on social media doing posts constantly. But apparently that's what's working in today's social media world. My point is, learn from people that know what they're talking about. Like all the people in my worldstoptraders.com site. They're all good people. Anyway, back to this. Minor gaps tend to continue, especially if you've got a bullish lower shadow. Now, this is not a hammer, okay? Hammers come at the bottom of downtrends, and there's no hammers on this chart that I can see. But it looks visually like that. It's got a large horizontal body and a shadow to the bottom. That's a net bullish pattern because it's following a gap. And this would be a bullish cup pattern if you're to plot out the data points. So that tells me I will often teach traders to go in at the 50-cent mark above the whole number, the nearest whole number. So if this kind of talking is somewhat interesting and compelling to you, I urge you to join me at breakoutmastery.com, because this is the kind of thought process I go through as I look at the hottest charts and what's coming next. And I always answer questions about, it also kind of doubles as an alert service. And if you've been with me, many of you have been. I've had hundreds of members at Breakout Mastery over the last, 7 years now. 8 years I've run the program every single Wednesday since the year 2011. Every last Wednesday of the month, of each month since the year 2011, I ran Breakout Mastery. I've had hundreds of members thrilled, too. We got a really high retention rate because it doubles as an alert service, mainly for swing traders who want advanced breakout patterns and advanced thinking. So it's a really perfect add-on or something to use in conjunction with swing scans, because I have the time to go into a deep dive masterclass level training and do a lot of intensive Q&A. Sometimes traders will bring charts where they got stopped out, and I'll give them tips on how they could have avoided it based on what I see. A lot of times it's they're trading the wrong chart in the first place. So I give scanning criteria tips as well. So do join me, if you want to learn more at breakoutmastery.com. Bed Bath & Beyond. Here's another pattern to be wary of, be cautious of. If you see a large whole body green candle followed by a flatter candle, that usually leads to badness, right? Or pullbacks, or at least not buyers. It's kind of like a logarithmic curve. You got large, this is another large, but then a small candle. That means you don't want to buy after that, because often it stalls and drops. And I do cover cheap instruments. For example, I bought just 300 shares of Pier 1 Imports at 37 cents a share back here, and I sold 250 of it on the way up, because, hey, I doubled my money. So not a lot of money. Should have done thousands of shares, right? But it's okay. And waiting for a bounce. But anyway, this guy had been up at 2 a share, went down to 30 cents a share, and it started to bounce. We also cover pivots. Notice the progression of these three. This is kind of like a breakout, if you want to consider a breakout above this congestion box here. This is a breakout progression of small, medium, large green candles. And so that's the opposite of the previous pattern. This is a good breakout signal. If you see, it's like the great movie Highlander with my favorite actor, Sean Connery, and some guy who played the Highlander. But anyway, sorry, I forgot his name. There's a really good spin-off on Amazon Prime called The Raven. about this tall blonde Highlander woman. It only lasted one season, but it's a great season. Highly recommend that on Amazon Prime, The Raven. Watch it. It's a great series. But I digress. The point is, like Highlander in the Quickening, you got the lightning sound, you get small, medium, large, whole row body green candles, volumes on the uptick. We got price action in play. If you see this progression of small, medium, large green candles, usually makes for a good breakout. Okay, so that's the kind of thing that I spot for traders. And I just spotted that for the first time in my life just now, right? But it's the kind of thing that I spot for traders on the fly as we evaluate the charts and their trade worthiness and the patterns that make sense intelligently to focus on. The depth and the expertise that I offer is unparalleled when it comes to breakouts, right? I'm a guy who actually does this, and I do this for a living, and I know what to do. So hopefully I can be a trusted part of your your education and your training and your coaching and all that kind of stuff, and a guy that you can learn from. So that's about it for me. I'm losing my voice. I do a lot of training. I want to go spend time with my family. Actually, I want to go play keyboards again, to be honest. I play saxophone in the daytimes and I play keyboards at night. I play a lot of Ibiza, trance, Tiesto, Diplo, Hardwell, EDM type music. So that's kind of fun. Anyway, I digress. It's kind of a last thought. Look at what is it? Tiesto Tomorrowland 2018. I exercise daily to that big, huge 130,000 person Belgium concert. Tiesto Tomorrowland 2018. Some great songs there. And some great trades here. So I hope that this has given you some food for thought. I bought a little bit of this guy, Givo. I have no idea what the company is. Near the bottom, like 285 or something. We'll see if it bounces. Oil's been on kind of a weak bounce, but mostly I'm a bear. And one thing that we'll be covering in great depth and detail are these inverse ETFs and the differences between them, because they all look similar, right? SPXS versus QID versus SRT versus TZA versus SQQQ versus, well, not DGAS on its own, and so is LabD. It's a little bit different. But anyway, these guys all have really good breakout patterns to learn from, and we cover a blend of both ETFs, whatever's strongest in the current markets, plus great breakout charts for you exclusively at Breakout Mastery. So I do urge you to consider joining me. If not now, sometime this year. I've got a monthly subscription plan. It's only $67 a month, and if you get one good trade idea, it's more than worth it, right? I've got an annual plan too. So figure out what you want to do, and I hope that I can be of help. See a question from a trader. Is a breakout leads to failure? Should I wait for them to come down to level of box trading? And yeah, in this last couple of months especially, it's been a case where, and that's a good advanced tip too, for the fellow ETF players, breakouts would have been great in this on the way up, but usually TVIX is it's a bear ETF in which buying the pivots is smarter than buying the breakouts, because oftentimes the breakout pulls back and you could have got the shares cheaper on a pivot, which is what I was doing today. I was just knocking this sucker out of the park. Boom, nailed it, baby. But anyway, I buy the pivots. I tend to sell the breakouts. I think my sell here is like 49.7 or something like that. I got to go look it up on my Fidelity account, but it's anyway, so selling the breakout and buying the pivot works for TVIX and other instruments. So it depends on the instrument, but oftentimes just simply buying the breakout and then putting a stop under the day's low and then walking away would have worked out fine. But other times buying the pivot gets you price improvement. So how to do that and when to do that is something I cover in Breakout Mastery too. So for both swing and intraday. So yeah, good question, man. So a question from Vibe. What have I traded today at breakouts? Well, I showed you guys the screen cap. Did you look at my YouTube video? And I can pull up, I don't mind opening my Fidelity account again. I'm completely transparent with everything. I'm a very honest guy. Let's see. I have to cover up or delete out my account number so that's not filled, but You want to ask what I traded today? This is what I traded today, starting from, and I closed out the day by buying 30 shares each of TVIX and TQs into the close, about the same dollar amount, just $1,500, $1,300, because one of them's going to screw me, another one's going to put money in my pocket. I don't know ahead of time which one. That's the beauty of this thing, is an arbitrage approach. But anyway, I buy both the long and the short, and then I scale into whichever, like I did today with TVIX, I scale into the one that works out. But this is what I traded today, so you could see some TQs as a hedge, some SQs, some Lab Ds. I think I got stopped out in the Lab D. I tried a couple of times. I put in an order to buy eBay. I wanted to buy it at 33.08, but it never got over that 33.08 level, at least not by 330. But I was going to buy that one. I did buy all these dollar amounts are actual orders that were filled. So does that answer your question? This is what I traded today. I'm a fucking maniac. Who else in the entire freaking industry that teaches traders actually trades this much successfully and proves it with real money trading? This is from my Fidelity account. Yeah, Kronos, that was it. Kronos, I nailed it. Where'd I got the first breakout and traded it right. Yeah, look at, or no, I think it was MDWD. I bought 509 and I sold 595. I bought it at 509 and I sold it at 595. That's a baller trade, right? That was good. That was like 70 cents. I'd only done 100 shares, so I only made like 60, 70 bucks. But for those who want to trade larger size, that would have been a really, really lucrative trade. And that's a breakout whole number MDWD. Let me show you that. That's a good example of my whole number strategy, where I buy right above a whole number. I bought 509 right here, and I sold 595 up here on the rollover. So I got this entire biggest run of the day, locked it like clockwork, baby. And I teach traders how to do that. I've been doing this 20 years. So that's P&L proof. So does that answer your question? Is what I traded? This is what I traded, 100%. And I sold my TVIX on the open because the gap up was starting to go down. So I didn't know it was going to run 8 points that day, so I sold it. But I rebought continuously on the way back up, and you can see all the order flow. I will still want to count these transactions because that's, I negotiated a slightly lower rate on my commissions because I trade so much, but 4, 8, 9, 10, 21, 2, 3, 4. 30, 34. Somewhere north of 40 or 50 trades today. Wow, maybe 70 trades, maybe 80 trades. I don't know how many trades I did. I'm a freaking maniac. And I do this so I can make money. And also so I can teach, because I'm a passionate fan of training, experimentation, and testing. So anyway, I showed you the P&L proof. I bought 509, sold 595. I bought right above the 5, sold right below the 6. That's a really good professional trader's way to trade within whole number ranges, okay? To my credit, I resisted buying any kind of bounce attempt later in the day. That's the one and only time I traded it, and I nailed it for the majority of the breakout. You know, and you have my word, I like to teach you these kind of things. I'm the voice of experience. I've done tens of thousands of real money trades, and I do so every single day, right? So unfortunately, you know, I'm a former corporate training and development trainer and consultant for big Fortune 500. So I've got a lot of, and I'm a UCLA graduate, and I've got a lot of credentials. But most of the people in the trading industry are completely full of hogwash, right? I'll be polite. Most of the people in the industry are BSers. They're either not traders, or they trade 2 different accounts simultaneously and don't tell you about the one they're losing in, or they trade on paper and try and pass it off as real, or all kinds of BS and stuff. So be deeply cynical and suspicious about everybody in the trading industry. I am, but I'm, you know, one of the traders advocates. I'm the real deal, and I'm not out there saying you'll become my next millionaire. No, you're not going to become a millionaire anything trading, probably. So sorry, I'm not going to try and BS you with, well, you just got to study and buy tens of thousands of dollars of my stuff, and then you too can maybe become my next bajillionaire student. No, I don't mislead people, and I don't paint. This is a hard as fudge. I'll be polite. Hard as frack It's a Battlestar Galactica reference, frack, from the 1977 Lorne Michaels. I used to like that. Hard as frack thing. This is not easy. This is tough as heck, and I hope that I can be of assistance to you in your learning journey, illustrated with actual live trades. So anyway, that's what Breakout Mastery is all about. A kind of long answer, but I wanted a question. Oh, thanks, Trader, saying no one in honest and open on trading personal info like you. I appreciate it. Hey, John, no, I'm not doing options in Breakout Master. You can still use it for the directionals. If you want to buy calls or sell puts against it using the thing. The neat thing, I've got a lot of options traders that have worked with me in the course because I'm really good at identifying the patterns and which ones may make for good directional. As an options trader, you're always looking at directional volatility, right? And you're looking at what price in your strike chain is going to give you, you look at things like the open interest and the volume and look at which price is likely to hit by expiration without having it expire worthless. And one of the biggest challenges in the world of options trading, unless you're doing straddles or strangles or iron condors or butterflies, if you're doing any kind of directional play, see, I actually know options, and I should start teaching options, but I like to do what I'm very best at, which is active day and swing trading underlined. But the point is, I know options, and I've traded, but one of the things is you need to identify the best directional volatility charts so that you can price project out where the next run is going to be or where the strike's going to hit before expiration. And so using the kind of charts in the process that I teach can really be a big assistance to that because it can help you identify not only pivot charts like that's kind of a hint. A hint of the year is, at least what I'm going to be doing, is buying all these inverses on the recovery. I think that's the big play of the next month is buy all these inverses as they go up. I am. But anyway, you can learn to use the directional volatility in these guys for options plays as well. So yeah, good point. Oh, thanks. Good to hear, 5F, about being there. All right, I think that's it for the questions. Thank you so much for being here. I'll be in the live room tomorrow morning trading again. I was trading all day today. As long as I'm in the money and I'm consistently making winning trades, I give myself permission to trade all day. And today was fine to trade all day because I was trading mostly TVIX and was going up mostly all day. So that was cool. But normally I try and get done by 10:30. Very unsuccessfully, to be honest. I love trading so much. It's really, really hard for me to turn the charts down or minimize the charts and close off the trading interface because I love trading. It's so much fun. You make money at trading, it's fun. It doesn't matter then how much money can you make or how little can you lose when you're wrong. That's why I trade so frequently. Like my colleague Tom Sosnoff, who is absolutely brilliant. He's my favorite guy on YouTube to learn from. Sosnoff, the co-founder of Thinkorswim, and I did an interview with him, and he was gracious enough he does the keynotes at a Money Show. He's brilliant. And he doesn't talk about charts. He talks about implied volatility and risk management, which is much, much more important than the charts. The numbers are 1,000 times more important than the chart patterns. But anyway, like he says, trade small, trade often. That's what I do. That's what any experienced trader does. You trade small, you trade often. Yeah, the broker gets a lot of commissions, but you don't want to trade small, trade infrequently. That's what these moron kids incorrectly teach. These YouTube one-hit wonder guys who are like so young, they're like in grade school, and most of us, if you guys, a lot of you are probably my age. I just turned 55. Most of you are probably my age or a bit older, right? I appeal to the smarter, wiser, older demographic. I don't really appeal to the 22-year-old college kid in a dorm who's got $300 to trade with. Thank goodness. So, but anyway, the point is, the stupid way to trade is large share size, magic patterns, one or two charts, and hope for the best. That's not how you trade. That's how you lose your ass as a trader. You will lose your money as a trader if you trade large, trade infrequently. But there's a magic pattern, and I just need to learn the magic pattern. No, it's all about a random walk on Wall Street. Things are going to bite you in the ass more than half the time. Even after 20 years, I still get stopped out more than half the time. I don't suck as a trader. I'm a brilliant trader. But more importantly, I'm a brilliant risk manager. And that's where you need to focus your energy if you're going to make a livelihood or do well as a trader is tight risk management and throw a lot of darts. Little tiny stops don't cost you much. the ones that do start to work out, you scale in and you build the trade. So that's what I'm all about. Hope that helps. I got to go. And I don't got to go, but I want to go because I want to go eat some dinner and hang out with my family. So you guys have been great. Thank you so much for being here. Do consider joining me at Breakout Mastery. If not now, sometime. I'll be running it at least till the end of the year. I may wind down some of my programs at the year's end of 2019, but I will promise to be around and run them. Everything that I have in place right now, I will guarantee to keep running until the end of the year. I'm looking to sell my business. I keep getting offers, right? But kind of like Shark Tank, but the negotiations haven't been appealing enough yet. I'm looking for a good high 7, low 8 figures, so I'm still waiting. But anyway, I'm sure somebody will step up once I continue to grow the base. And we've had spectacular subscriber growth, so the numbers have been great, so I appreciate that. Anyways, you guys have been great. I will be here for you at least through the end of this year, so join me at breakoutmastery.com, or you can go to trademastery.com/breakoutmastery, and that'll get you there too. So, see a question Steve's asking, how many positions would I have on at one time? Well, hell, I mean, I have had as many as 30 or 40, but on an average day, up to 8 or 12, but as few as 2 or 3. But typically under a dozen, up to close to a dozen or so, somewhere in that region. As low as 2 or 3, maybe 5 or 6. I may be trading on some size. Some others I have small placeholder trades in. But yeah, I like to trade aggressively. Yeah, good point from JQ. You're exactly right. It's a difficult business to sell. You are the business. Yeah, that's a tough thing when you're a knowledge worker. It's like, you know, any knowledgeable person. It's like back when I was doing practice management consulting. If you have a brilliant surgeon and he's the reason why everybody goes to the clinic, it's hard for him to sell the clinic to a big HMO if he's not part of it, right? And oftentimes they want to go retire to their yacht in the Caribbean or whatever, and they don't want to be in practice. So it's tough to sell the business when you're the practitioner. You are the business, right? So you are right. That's the challenge. Oh, thanks, 5. I was saying, please don't sell the business. Hope it'll be around next year too. 20 years, though. I mean, really, I had no idea this business would be so successful and be around for 20 freaking years. That's like, think about it like a TV show. 20th season. 20 seasons I lasted. That's very, very long and successful for a small business owner, right? But, you know, it's thanks to you folks. You know, it's thanks to all of you finding value in what I've got to teach, so I appreciate it. Speaking of great TV shows, I like Murdoch Mysteries, set in turn of the century Toronto, Canada. A police whodunit with brilliant acting. Murdoch Mysteries, available now on Acorn TV for just $4.99 on Amazon Prime. And they're not paying me to say that. I'm just recommending it because I love Murdoch Mysteries. It's a great TV series. Watch TV shows, or Blue Bloods is good, pretty good too. Look at police procedurals, things that get your mind thinking about problem solving. Elementary is brilliant with Lucy Liu. What happened to it? They stopped. The season ended, I think. Anyway, police procedurals, murder mysteries, anything that gets you thinking about, or NCIS or CSI, you know, crime scene, whodunit, put the pieces of the puzzle together. Train your brain to think like a detective and think about how to put together okay, you have trace evidence, you got DNA, you got fibers, you got to run CODIS and see if there's any perps that match a partial print that was lifted. I got buddies in law enforcement and military, so sometimes I talk like cop talk, but anyway, you got BGs and perps, bad guys and perps out there as market makers and traders that are out there to try and take your money. So what you want to do is fight back by having knowledge that teaches you how to stay away from the wolves of Wall Street and in on lucrative opportunities when they set up. And that makes a lot of sense. So, yeah, good points, Mukesh. I appreciate it. Yeah, swing scans, and I'm really doing a lot of work in the live room for everybody this year. It's the most I've ever done, all 5 days a week. But since I'm trading 5 days a week, might as well be there for everyone, right? So, anyways, you guys have been great. Thanks so much. Do hope you'll consider joining me at Breakout Mastering. If not, I hope that this has given you some food for thought in terms of patterns. We covered tall green candles. We looked at progression of like this, or small, medium, large. See this pattern? Like large venti grande. to use coffee analogy. I love coffee. I like cold brew. Starbucks cold brew is really good. We're lucky our Starbucks here, one of our Starbucks here locally is part of Barnes & Noble, which I guess turned into a toy store when no one was looking. But anyway, which is great. It's cool. They got lots of toys there for the kids to go look at. Pick up the slack for Toys R Us. Give Walmart a run for their money. But anyway, at the Barnes & Noble, there's a Starbucks that has a Cheesecake Factory cheesecake in it. And I always like the plain cheesecake along with some cold brew coffee. Or a venti Americano with an extra shot. Get 5 shots of espresso. Anyway, small, medium, large candle, we covered that. We covered the fact that oftentimes after a large candle, you have a flat candle day, so that's why I'm not too excited about TVIX tomorrow, though it banked me so much money today, and I'm really happy about that. But I'm not expecting the same performance out of that chart tomorrow. I'm expecting a mean reversion grind pattern. It's going to drop and chop sideways. That's the 70% over under. The 30% would be a breakout runner continuation. I'll trade it. It's what I do, but you have to know ahead of time what the patterns are that are most likely to make you money, which ones are most likely to bite you in the ass, and make sure you're making your trading decisions accordingly. So anyway, you guys have been wonderful. Thank you for being here. I do appreciate it. I'm out. See you next time. Bye for now. My family's patiently waiting. But I love being here with you guys. I really appreciate it. So like an isolated life, living in some big-ass McMansion by myself with my family and the little dog. It's great having a big community of hundreds of people to work with. So thank you for adding value to my life. I appreciate it. And I hope to see you in Breakout Mastery. Take care and trade smart out there. Bye for now.